Hi everyone, my name's Tim Fairweather and welcome to another Brooks Price Action Weekend Market Update, and today we're going to be looking at the FTSE. Well, let's take a look at the yearly chart. So we're looking at FTSE. So you can see we'd have a couple of legs up. This looks really similar actually to the DAX weekly chart, but we're on the FTSE yearly chart. So we had basically a double top and then we broke above that double top and now we're breaking to the upside. Bears had a couple of legs sideways to down. This turned into a high two buy. If you don't take the buy above the inside bar, now you've got a bull follow through. It's got a big tail, buyers. And now we're breaking out to a new high above 8,000. And because of this chart, I have been bullish whenever we come back to 8,000. Now, if we take a look at the monthly chart, you can see 8,000 was resistance and we went sideways last year in this channel. And then when we got to here, I was ready to start buying. I thought the bears would fail with their bear breakout because they had gaps and we had a buy signal, pull back to close a breakout point, another pause, another buy signal, buy the breakout point. It's now buy the close and it's buy below. And we've just been triggering buy signals. This is now 3 legs up on the monthly chart. So bears are going to argue a couple of legs sideways to down, but the bears have not been able to get more than consecutive bear bars. In my last month's report, I said it was unlikely this would be a bear bar because the bears haven't had 3 bear bars on the monthly chart since the COVID crash. We had a breakout and a pause measuring gap that we reached, and we've been going sideways. So we might be at the higher time frame measured move, and it could just be a tight trading range here. Do you buy above here on the monthly chart? Well, we'll see how it closes. Generally, buying the close of any bar in a trading range is a bad idea. It's usually better to fade the close, but because we're in a bull channel and it's a good looking bull bar, that might be an exception. We'll see. Let's have a look at FTSE on the weekly chart. So you can see here this measured move. So we broke out, we created a gap, and then I thought that was the measured move target. It happened to be this exact line that we're sliding around at the moment. The bears sold off from there, and I was looking to buy around 8,000 because a lot of you know I like trading breakout pullbacks. This was a strong breakout point. These are strong gaps. Look at this bar. This says there's a lot of buyers. So for the last couple of weeks, I said, yeah, look, we might go down, but I'd be surprised if there weren't any more bulls here betting that we're going to go back up and test these highs. And last week was incredibly bullish. So we're back up into the tight trading range. Most of this bar is below the moving average. So there's an argument for waiting for a pullback, maybe to the high of this bar, or waiting to see the follow through. I think there's a really high probability it's going to trigger. Usually when the weekly chart triggers, you have a couple of days pull back into the range. Occasionally, you just take off and create a gap. So I'll be watching on Monday for indication of where we're going to lead. I think we're going to go and run any stops. If bears have got skunk stops in here, I think they're going to get run. I think they're good targets. On the monthly chart, there was what I call the highest high one. So if you bought above the highest bar on this monthly chart, you're up here, okay? That high was 399. This high was 395. And so what I've been talking about for a while now is that traders who bought the monthly chart have not had a chance to get out of that trade. But if you're a bull and you're buying in something that looks like this, there's a really high chance that you'll get back to your entry. So this deep pullback, I think strong bulls were buying, going for that target. This was also a bear inside bar, which is a low probability trade anyway, because it's an inside bar. It's also a bear bar in a bull trend. It's also sitting at the moving average, but it did trigger and did go down. I'm not sure if it got 2 to 1. No, not quite, which is what you'd expect in a bull trend. They really need to get a little bit further down to convince traders to keep getting short. Now those traders had to panic out. They tried to get 2 to 1. Now the bulls come back. Those bears have had to take 1 to 1. Others, now that we're back at the entry, we're probably just going to dip back to that close to let those bears out and then go higher. So is it always in long or always in short? Well, I don't think this ever went always in short, which is what I've been saying for the past few months. The swing point was very far away and it was very difficult for bears to get all the way down there and hold when everyone's selling above things. So for me, we never went always in short. You can argue, oh, we're in a trading range because it's so tight, bull gaps, so many bull gaps, and above a prior breakout point. So for me, it's always been always in long. And as soon as we go above this bar, I think that will convince everyone else And that's the weekly chart for FTSE. Okay, the daily chart for FTSE. So you can see a couple of things going on in this part of the chart. We're in this tight bear channel. And I said last week, when you're coming down in this tight channel, a couple of things can happen. One is you can just keep staying in this channel, climax reverse. The other is you can reverse right up to the top of the channel and go sideways and pull back to the middle of this channel. That gap's gone. So we've closed that gap. But the problem the bears had is this 8,000 round number. Now you can see clearly on the daily chart, tails, tails, and then look how strong this move up was. That shows you there's a lot of bull pressure there. So if we come back to that area, it's not going to be a good place to hold short. Bears did get a second leg sideways to down. 1, 2, they basically had a wedge. And they had an open gap. Bulls want 2 legs sideways to up. This is a bull micro channel, bad sell signal. Here's an inside bar. This was a warning not to sell anymore and wait to see what happens. Now you got a buy signal, strong bulls bought here and above that bar, knowing that the bear stop is all the way up here and they're going to have to scale in all the way. The bears reached a measured move target and now we've broken out of this channel. Now I'm going to keep the channel there because I suspect we run that stop, we pull back to the top of that channel, maybe back to that gap. Depends, this is quite sideways. But this is now consecutive bull bars, both closing on their highs. It's a test of the 200. It's basically a counter trend wedge. And this is probably going to have a couple of legs. What can the bears argue? Well, the bears are arguing that their stop's up here. And until that gets run, nothing's changed. But if I was a bear and I saw this and then this, I would close that short because this should be making new lows. And what it's doing instead is breaking out. Other traders see this inside bar and argue that that was the break above the lower high. That's a buy the close. This is definitely buy the close. If you have a buy here with a stop below 8,000, good chance you get to the all-time high before your stop gets run. So always in long, expecting sideways to up. I think this is going to have a couple of legs. It's probably not going to go right straight up unless it's going to be a climax. I'm expecting it to go sideways and then probably just have a bit more of a bull channel flavor to it. If you have a look at the climaxes in here, the bulls don't want things that look like this. This is too vertical. You can't maintain it. When it's too vertical, it just collapses. The strongest kind of trends plodding away. They go below things and buy. They buy lower, they scale in. When the market becomes climactic, that's when traders already have their profits. They have no reason to hold for a swing and the market reverses. So that's FTSE for next week. Well, thanks very much for watching. I hope you found that valuable. If you're in the Brooks Price Action Trading Room, I'll see you live during the week. If not, have a great trading week and I'll see you next weekend. Happy trading.